to trade currencies, cryptocurrencies, and commodities and stock market indices. What we're gonna do in the next few minutes is gonna provide you guys with a quick update on the euro dollar, Bitcoin, DAX 30, crude oil, and before we start, as always, I need to stress that trading financial markets unfortunately is risky, and there's a genuine risk that we'll lose all of our invested money. Now, if you have any questions about what I'm going to cover here, then you're most welcome to use the chat box here to your right to ask questions about any of the markets we're going to cover. If you have questions about other markets, then you're most welcome to join us in the premium section, which is a webinar for clients of Amana Capital. And during that session, you have the possibility to ask any market-related questions. It's free to be a client of Amana Capital, and it's free to join the premium section. Okay, let's begin, and we're going to take a look at the euro. But before we do that, I want to mention that we are looking for contributors here at Amana Capital, in particular, sorry, Trade Captain. In particular, we're looking for people that can contribute with technical analysis. I'm not looking for too long updates, about 150, 200 words, and it's about technical analysis. You know, if you've been trading for a year or two, or sorry, for a few years, at least 2 years, I would say, and you know, you feel that you understand technical analysis, and you know, you're doing your analysis already today for your own sake, and you want to get paid for sharing that. So in other words, you do your analysis as you always do for your own trading, but by writing that down and submitting it as with us, you could we will pay for that. Anyway, just go to technical analysis, just check out the sections here. It's a part-time contributors, so a minimum of 2 hours, 3 times a week, but ideally 4 hours a day, Monday to Friday. Make sure that you send something, not just, I've seen people sending 2, 3 lines, which makes it impossible for me to know if this is something you can do. So the longer the better, but I understand everybody's busy. So if you can write maybe 250 words and send that to research at tradecaptain.com if you want to apply. As well, if you have any questions, you know, you can just email research at tradecaptain.com. You're also most welcome just to reach out to me via Twitter at AlexFX00. Okay, let's begin. So this is the euro. So the euro is spiking to the upside today. You're looking at a 4-hour chart, and the trend is bullish above 122.84, which is this level down here. So there's nothing wrong with being bullish, but it's definitely wrong to buy up here. At least that's what I think. Why? Because the market has corrected or has rallied, and it rallied with about well, 174 pip, and then with the spike today, 190 pip. And there's really no correction here, you know, at all. You know, it didn't pull back a little bit. So this, I think what happened now is that people that were short got stopped out, and people that, you know, maybe been holding positions from here, probably, you know, forced to close out. But this is not the time to buy, because every time you take a decision to buy, you need to see, okay, so what's my potential reward? Well, if we hit all the way to the high, you can make 69 pip, and then you need to look at what's my risk. Well, stop losses should always be placed uh, under a low, unless of course you use some other sort of technical system to or other statistical system to figure out where you should put your stop losses. But most people, they just put the stop loss under the low because that makes sense. So here you're risking 167 pip to potentially make 69. So you can see it doesn't add up, and that's why I think this break to the upside has little to will probably not be successful. In fact, I think it's going to probably pull lower, and I'm not sure if we're going to go down all the way down to 128.80 at 123.80, but down here, I suspect traders going to look to get involved. If I take a Fibonacci from the low to the high, you can see the first fib is at 124, 50% correction is at 123.80, and I'm just looking for a 50% correction. All right, so there's nothing special fancy with this, just a corrective move, and then probably up to the high, and then we'll see. In the long run, the euro is trading to the upside. You can see this price is from December, and this is from January, and this is another low here from March, so potentially higher, but again on a dip. All right, is Bitcoin? So Bitcoin is doing good in a way that we were bearish, right? Bitcoin itself is, in a downtrend, and we're trading down here. I said if it swings to the upside here, we can sell. And the stop loss was here. It's now been reduced to 9,245. We're in a bit of a profit. We pretty much reached the first support level. This market though can continue to decline. It could easily reach 7,300. That would give us a profit of about 10% versus a risk of 13. So not the best, but okay. In fact, because we're dealing with a downtrend, if we're trading at 6,100 in a week or two, then that wouldn't surprise me. So again, there's no real change here to the bias. If it swings back up to the sell zone, 8,211 all the way up to 8,700, I think traders are going to be ready to sell here, targeting the lows. Here's the price of crude oil. The trend is bullish. The idea was to buy from 65.10, and I'm gonna stick with that idea. The short-term trend is bullish, as you can see, and it's bullish above this level here. It could easily go down 65, 64.50, but as long as you're above 64, then we should be all right. Here we are risking 110 pip versus a potential reward of about 156. If we take out this high, then get ready for even higher gains or higher prices in the future. So here again, the likelihood that we're going to get a nice, good reward versus the risk here is relatively good. Here's the price of gold, and we talked about buying down here. Now we're at the highs. I don't want to be a buyer at the highs. People sold here on February 16th, on January 25th. Of course, take out these levels and we can have a massive rally. I discussed this in the past with you guys. If you flip to a monthly chart, you can see that if we take out something like the high here, which is 1376, then there is a little high here at 1343, but really the big levels are up here. So this is 1530, and then the actual high is up here, which is pretty much 1800. So yeah, take out 1376, and I'm gonna turn bullish. And why? Because we could rally with 11%, and then maybe in 1.5 years time, whatever, 30%. Okay, so it's definitely interesting, but today we're capped by these highs, and then you have that even bigger high at 1376. So there's really no point at all to be buying here. In the short term, I mean, we're still capped and trading sideways. So if this tumbles all the way down to 1334, then that wouldn't surprise me. Now, this is not the best opportunities because we're trading sideways. It's a little bit like the euro, we're trading sideways. There are better opportunities in the market, things with a trend, like the dollar yen, for example, has a nice downtrend. But if you want to stick with the short-term trend and the short-term momentum, then being bullish about 1,324 is support, and it might come down to 13 at 35, and then swing to the upside. Take out the high as well, could continue to head higher like this. So I'm bullish, but from lower levels. And here, I don't want to get involved unless we trade sideways and then take the upside, or unless we go down and then push. So it's about that risk reward ratio. Here's the German DAX, and we were bearish here for a very, very long time. I think the first time we touched targets here was on the beginning of the month. Almost got stopped out, but eventually moved to the downside. Now here, I think it makes sense to remain bearish. We want to stick to a bearish view as long as trade below 12,451, but ideally selling from a higher level. These are stock markets as well. They like to correct most of their decline. So here we're looking to risk 2.5%. If we go down to the low, we can make about 3.39% return. Now here's the low, but you want to allow the price to spend some time here before it breaks the downside. Here as well, yesterday they tried to break the downside, but the reason why it didn't work out is because the market had not consolidated. So yeah, it took out the low here, but the risk reward ratio was still not good because people were not willing to sell here with a stop on the other side. I think this is a little bit why this did not work out. And then again, with trade wars in general, um, what is interesting is that if you look at the steel and aluminum tariffs that the US introduced, it's top countries where imports from are exempt. Let's actually see if I can Google for that. I don't know how old this is, but European Union, right? This has been they are exempt, so 23%. All right, Canada exempt as well. South Korea 10.5%. They made a deal with South Koreans as well, so this is not hugely impact. Mexico as well exempt, and then you have Brazil exempt as well. As far as I know, it's just Japan, Turkey, Taiwan, and China that are not being exempt. So in essence, add this up, and you can see that a large portion of US steel imports are not going to be affected by the tariffs. Why? Because they're just making these tariffs, and what they want to do is that they want to go use this to negotiate a better deal. In the case of South Korea, US car makers are not going to be allowed to sell, their quota to sell cars to South Korea has now been doubled. So I think this sort of trade wars is just for show, and for now at least, if it continues in the current path, then shouldn't maybe the S&P 500 be at higher levels? Shouldn't the DAX as well be at higher levels? So that's something to bear in mind. It's gonna be choppy, but if nothing happens and we're still trading down here in the next month or two, then people are gonna say, well, the economy's doing good. Why are we trading down here? This is the S&P 500, by the way. Now, technically, we need to bear in mind is both the DAX, both the S&P to some extent are in a bearish downtrend. So I'm not saying go out and buy this today, but keep that in mind. I don't think it's gonna be as bad as you're reading online and as the markets feels today. Might be wrong, but again, I'm gonna wait until the technicals agrees with my theory. Is there anything we need to pay attention to today? Not really. From a technical point of view, there's not too much. Sorry, a macro point of view, none of these events are important enough, so I wouldn't really worry too much. There's nothing to really pay attention to today. Data tomorrow, US GDP, but this is for the fourth quarter. So again, most likely nobody cares. Um, Consumer price index, again from the fourth quarter, that could be, give some attention to the market, or the market might give some attention to that. So there's nothing really super interesting in the next 2 days. Bear that in mind. If you want to check out the economic calendar, click here. What's interesting with this economic calendar is that it's faster than the one you're going to find on two other big websites. I think you know which ones they are. Why? Because this one loads much faster. The other one is a human being that needs to type in the results. So this is automated. What else? We have an upcoming webinar, Top Trade Ideas for April 2018. So I'm going to share with you guys two of some ideas that I find really interesting for the next month. It could be a commodity, it could be Forex, it could be a crypto coin. Anything where I see that the risk reward ratio is looking really good and where I see that we could potentially have a very nice trend. In general, I'm looking for a breakout setup. I'm also gonna show to you guys like which are the trends that made me some returns this year, and I try to explain to you guys why I took those trades. It's a good educational webinar. If you want to join, you sign up here. If you are already a member, sorry, if you are already a client of or a member of the premium section, then you can just sign in. It's free to join any webinar, so it's no problem. Just sign in with your email and you're in. Okay, All right, guys, I want to thank you so much for watching, and I'll see you guys tomorrow at 9 a.m. London time. Please bear in mind that we're on BST now, which means that it's UK summertime. So we're starting 1 hour earlier than usual. As well, don't forget to like the video. It's very straightforward. Click up here, and down here you can just click on like here. And also, if you have any questions, don't or anything, don't forget to comment. If you like it, it's really important that you try to help and support these videos by sharing them because it's very straightforward. The more and more people look at them, the more and more we want to contribute and doing this. So if you like them, please help out. Click on the like button and subscribe to tradecaptain.com. We're a new website which started just in August last year, so we need all the help we can get. Okay, guys, have a good day, and I'll see you guys tomorrow. Thank you.